Shares of China Evergrande, the world's most indebted property developer, plummeted 87% on its open on Monday, when trading resumed after a 17-month halt. The company posted a loss of $5.38 billion for the 6 months ended June. That's a smaller loss compared to the same period a year ago. But in July, the company filed for Chapter 15 bankruptcy protection in a U.S. court, which protects its U.S. assets from creditors while it works on a restructuring deal elsewhere. Evergrande defaulted in 2021, but also announced an offshore debt restructuring program in March, having struggled to finish projects, but also repay suppliers and lenders. Kim Beng is founder and CEO of strategic Pan-Indo-Pacific Arena. He joins us now from Kuala Lumpur. Thank you for being with us today. Right, and I think we have a broader problem here in China. It is just not having to do with this particular company, Evergrande. Why has this been happening? Can you help us understand what's the current state of the real estate sector in China?
With regards to the real estate sector, there is that traditional notion, if not a global notion all across the world, that the ownership of property actually equate to wealth or the ability of a class to go beyond the current conventional status quo. That is also the economic logic of the Chinese over the last 25, if not 30 years. It could well be the fact that the property sector has developed a speculative bubble, but then we don't really know that for sure. What people are saying is that the potential property meltdown could actually lead to losses of probably $9 trillion to the degree that the Chinese political leadership is able to understand and also put a very clear and lucid picture on the whole situation. I think the Chinese is capable of handling whatever crisis that may be looming right now.
Right, and there was a potential bubble there in the real estate sector in China. And what are the ramifications of these internal problems for the rest of the world? We know China is very important when it comes to exports. And what about the new measures as well that to try and stimulate the stock market that the government has just introduced? Will they help at all, in your opinion?
The irony of the Chinese economy right now is that the e-commerce of the Chinese domestic economy is actually doing extremely well. In fact, Alibaba posted a profit of an increase of almost 64% just a few months ago. So that's a very precise and incredible indicator that the digital commerce of China is actually pummeling and pushing the economy forward. But with regards to the property sector, as long as what I said earlier, there is not too much speculation that has gone into the property sector by all the middle classes of up to about 800 million people, then the danger should be able to be mitigated with the proper policy instrument.
Kim Beng, thank you very much for this analysis. And now let's go to other top stories from around the world. Chinese car maker BYD's electronics arm has agreed to buy U.S. manufacturer Jabil's mobility business in China for $2.2 billion. The deal will help BYD Electronics expand its production base in the world's largest mobile market. Jabil is one of the largest contract manufacturers in China, making and assembling parts for companies like Apple and Dell. Australian miner Fortescue has announced the resignation of its co-CEO Fiona Hick as it posted its lowest annual profit in 3 years. Net profit in the 12 months to the end of June fell 22% to $4.8 billion due to China's economic downturn. Earnings were also hit by $1 billion pre-tax impairment charge linked to its Iron Bridge magnetite project. And France will spend more than $216 million to fund the destruction of surplus wine production to support struggling producers. The decision comes after France's Ministry of Agriculture received approval for a so-called crisis distillation aid from the EU to help distill wine into ethanol to be sold for industrial uses. The government hopes to increase exports for the country's wine producers as demand by French drinkers falls.